Hello, and welcome to Tuts Plus. My name is Bob Flisser. When you buy a capital asset for your business, like a machine or a vehicle, maybe a computer, you'll probably want to depreciate it over time. This will make your financial statements reflect that the asset is being used up gradually rather than using it up all at once. Think of a car that lasts several years or a computer that lasts a shorter number of years. You might even be required to depreciate certain assets. There are several types of depreciation, and we're going to look at those in this tutorial. The first and most common is called straight line depreciation, and with straight line, it's the same amount of depreciation every year until you're done. The second type that we're going to look at is called declining balance. This is a faster method than straight line, and it's still going to be the same amount every year, or whatever period you're using. The third type that we're going to look at is a special type of declining balance that's called double declining balance, and it's simply double what the normal declining balance would be, as the name implies. And the fourth and last type that we're going to look at is what's called sum of years digits. That's an accelerated type of depreciation where it's front-loaded. You get more of the depreciation earlier on than later on. You can calculate depreciation in any spreadsheet program. You could use any version of Excel on Windows or on Mac. You can do it in the web-based version of Excel. You can also do it on Google Sheets. And what's nice is that all of the named functions we're going to look at in this tutorial will work the same way in all of these applications. The workbook I have open is called Depreciation Worksheets, and if you're viewing this video on the Tuts Plus website, you can just click the link to download this workbook. Or if you don't have access to it, or if you don't want to download it, you can simply type in what you see here on my screen. What I do want to call your attention to if you go and download this workbook is there are 8 worksheets here. The first 4 that the tabs are coded in yellow, that's what we're going to work in. None of the answers have been done yet. And then there's another 4, and you have to scroll here to see them. These have the examples already completed. So you have your choice which way you want to look at. So we're going to start here with straight line depreciation. And before we actually do it, let me give you a heads up of how this works. The straight line method has 3 parameters that you use. The first is cost, and that's the initial cost of the asset that you buy. The second parameter is the salvage value, and that is when the depreciation is all done, what is the item worth? And the third parameter is the life, and that's how long it's going to take. That's typically measured in years, but it doesn't have to be. The syntax of the SLN function is, we say SLN, and then in parenthesis, cost, comma, salvage, comma, life. Like any function, there is a comma after the name of the parameter. And now let's go use it. So starting here in the straight line worksheet, I'm going to click over here in cell A8, and I'm going to say equals SLN, open up the parenthesis, and in Excel, you can see it gives us a little bit of help of what the parameters are. So the cost, I'll click over here on B3, put a comma. The salvage value is that 20,000. Click that, put a comma. Now, I'm just assuming that this is dollars, but it doesn't have to be US dollars. It could be Australian dollars, euros, yen, whatever currency you're using is fine. And after that comma, I will click over here on B5. So I have the function here is equals SLN, and then parenthesis B3, comma, B4, comma, B5. Close the parenthesis, press enter, and there we have 48,000. So that means that every year for 10 years, we take depreciation of $48,000 or whatever currency. Okay, so now let's take a look at the next method, declining balance. So I'm just going to click here on the declining balance worksheet. Like straight line depreciation, declining balance method is a constant amount each year. It's just a higher rate. It's a higher amount. Now, this is the formula that Excel and Google uses to calculate it. And basically what this means is the worksheet multiplies a rate by the asset's declining book value. And that book value is the total cost minus the accumulated depreciation, whether it's the first year, second year, and so forth. Sometimes that book value is called the carrying value. Whether you call it book value or carrying value, it doesn't matter. Don't get it confused with the market value. Market value is if you're actually going to go and sell the item, the property or the car, the computer, whatever, how much you get for it. Book value and market value might be completely different things. So this is the rate, but let's take a look at what the parameters are of the function. That's very similar to regular straight line. We have the initial cost, we have the salvage value, we have the life. That hasn't changed. But we have now two more parameters, and one is period. And the period means, let's say we do the depreciation over 10 years. The first year, the period is 1. The second year, the period is 2, and so on. So that's all that is. Don't get that confused with the fifth and last parameter, which is month. And month is actually an optional parameter. And let's say you buy an asset in June. Well, you don't have a complete year. So you could tell it, all right, start on the 6th month, or maybe you bought it in August and you want to start on the 8th month, something like that. If you leave off that parameter, then the function simply assumes that you're going to start in January and do a full year. The syntax of the function is simply equals dB, and then you put in the cost, the salvage, life period, and then optionally the month. So over here in the declining balance worksheet, I'm going to start off here in the first year, and I'm going to say equals dB, open up the parenthesis, and here Excel gives me some help with the syntax. So there's the cost, $500,000 or yen, whatever, comma, salvage, comma, the life, right? That's how many years, comma. Now the period, right? So each time we calculate this, it's going to be first period, second period, and so on. So I click over here, comma, and let's say that we bought this item in June of the first year, so that's going to be 6 months of depreciation of the first year, July through December. So I click that. Now, do not press enter yet, because we're going to autofill. We're going to take this and copy it all the way down. If you simply enter this and copy it all the way down or autofill it all the way down, you're going to get all kinds of errors. We want to make sure that B3, B4, and B5, and also B6, are going to remain constant. The only thing that's going to change as we autofill this is going to be A9. That has to change from A9 to A10. A whole discussion of absolute references versus relative references is beyond the scope of this tutorial. So I'm just going to have to assume that you understand it. So I'm going to select these first 3 parameters there, right? These first 3, and I'll press the F4 key on the keyboard to put $ before those to make those fixed. And now I'm also going to click on this B6, and again, I'll press the F4 key. If you want to type those $ in manually, that's quite all right. Hitting the F4 key is a little faster, and I put the closing parenthesis there. Make sure that A9, that should not be an absolute reference. There should not be $ there, because we need this to change. Okay, so let's enter that. There we go. I'm just going to scroll down here a little bit. So let's take that. I'll put my mouse pointer on the little dot there. You see I've got that little autofill dot, and I'm just going to drag that, or I could double click it, either way, down to the bottom, and now I have my depreciation schedule. And you notice I carried this out to 11 years, because that first year was only half a year. We had 10 years, so we have a half a year of year 1 and half a year of year 11, so we have a total of 10 years. Okay, so now let's take a look at double declining balance. So as I said at the beginning, double declining balance is really just a special case of declining balance. And it simply means that we're going to run it at twice the rate it normally would. But the function is actually more flexible than it sounds. It doesn't have to be double the rate. You could have 1.5 times the rate. You could have 3 times the rate. And I'm going to show you how to do that. And let's take a look at the parameters here. Just like before, we have the cost, we have the salvage value, we have the life. That hasn't changed. Period. Also, that hasn't changed, right? That's year 1, year 2, year 3, and so on. And the last parameter is the rate. Now, that's optional. If you leave that off, it's going to be double. It's going to be 200%. But you could specify that and make it a different amount. So the syntax is simply equals ddB, right? Instead of dB for declining balance, it's ddB for double. And we have all of those parameters: cost, salvage, life period, and rate. If you don't put in the rate, if you don't specify that rate, it's going to assume to be 200%. Also, you'll notice that unlike the regular declining balance, the month doesn't matter. It doesn't matter if you buy this thing in January or November. A year is a year. So let's go over here to cell B8. And we'll say equals ddB, open the parenthesis, and we have our little syntax help. So we have cost, comma, salvage, comma, life, comma, and here's the period, right? Period 1, period 2. And like before, we're going to autofill this, so don't enter this just yet. Let's select these first 3 cell references. I'll press the F4 key to put the dollar signs in. That A8, that has to change to A9, A10, and so on. So do not make that an absolute reference. Close the parenthesis. And I'm going to show you a little trick here. Instead of pressing enter, I'm going to hold the control key down, or if you're on the Mac, it would be the command key, and press enter. That way, I stay on the cell instead of going down and having to come back up. Anyway, I'll put my mouse pointer on that little autofill dot, and this time instead of clicking and dragging down, I'm just going to double click. So that brings it all the way down. So as I said earlier, we can specify a different rate. So I'm going to go down here, and I already put this in as a column title. Let's say we want 150% instead of 200%. So let's click there and B21, and we'll say equals DDB, open the parenthesis, and like before, we have cost, comma, salvage value, comma, life, comma, and period, right? We're going to start off with first period, comma, and to get 150%, I'm simply going to hard code it. I'll type in 1.5. And also, because we're going to drag this down, we want to make sure that these first 3, B3, 4, and 5 are absolute. So select those, hit the F4 key to make those absolute. A21 has to change as we autofill down, so you don't want to make that absolute. That 1.5, of course, is a constant. Close the parenthesis. I press Control Enter. Put the mouse pointer on the autofill dot and double click. And we filled in down to the bottom. So that could be as flexible as you want. Okay, let's look at the last one, sum of years digits. So I'll click over here. As I was saying earlier, sum of years digits is accelerated depreciation, but unlike declining and double declining balance, this is front-loaded. You get most of the depreciation early and less of it later on. And it's a little confusing. It's best to describe how it works with an example. So let's say we have an asset that is going to have a 5-year life. So this time we're going to do 5 years instead of 10 years. The first year, we add those digits. 5 plus 4 plus 3 plus 2 plus 1 equals 15. That's the sum of the year's digits. And then we multiply that book value by 5/15. Now, when the second year comes along, we add the remaining year's digits. 4 plus 3 plus 2 plus 1. And then we take that 4 and divide by 10. And of course, you could reduce the first one is 1/3, and the second one here, instead of 4/10, obviously is 2/5, but you get the general idea, and so it goes. So the parameters are pretty similar to what you've seen already. We have our cost, we have the salvage value, we have life, and then we have the period. So there's really not much more here. And the syntax is predictable. SYD is the name of the function, and then you simply plug in those 4 parameters with commas in between them. So let's go do it. In the SOYD worksheet, I'll click here on cell B8, and I'll say equals SYD, open the parenthesis, and there it gives us a little syntax help. So there's the cost, comma, salvage value, comma, life, comma, period. And let's select these first 3 cell references, press the F4 key to make them absolute, and let's close the parenthesis. I'll press Control Enter or Command Enter on the Mac, and now double click down to the bottom. So now I have my 5 years, and you can see how this is mostly front loaded with larger numbers at the beginning and lower numbers at the end. By the way, that formula that I showed you a moment ago, here it is. I wrote that out. If you want, for extra credit, you could take this formula and on your own run this formula down column C or down column D, just so you can see that, yes, indeed, it actually works. So now you know how to calculate the 4 most common types of depreciation. You have straight line for all-around general use, declining balance for an accelerated rate of depreciation, double declining balance for very accelerated or flexible amount, and sum of years digits for front-loaded depreciation. So I hope you found this useful, and I'll see you next time.